Afternoon guys, so quick video breakdown here for CAD Swiss franc, which was taken actually for one loss and then one win shortly after. So I'll break this down just quickly. You can see we're actually just in a ranging market here, so you can see it's not trending upwards, not trending downwards, it is just in a ranging market. So no confluence here on the weekly, the monthlies. When we go down to the daily, it becomes a little bit more obvious. So we can see we've got this upward sloping trend line here. Price has broken this, and then you've got the high here, and then you've got the low that was here. And then we were just expecting sort of some sort of pullback, and I'll explain sort of where the pullback, where I was expecting it to go to, and why I had this key level here on a lower time frame. But you can see sort of the gapped market lows, which is always a good indication of sort of where the bears and where the bulls sort of place their stops. Normally that's sort of like an institutional level, so that's sort of maybe where larger hedge funds have sort of a huge buy order or a huge sell order. So I had this level here in, and when you look left, when you look backwards, you can see there's multiple confluences there, so loads of touches. On the 4 hour it starts to make sense though. So we've got the high here from before. You can see where trend is possibly on this. You can see you've got an upwards trend, and you can see where we're looking for all that reversal. Trend has there's a couple of confluences here that sort of shows that the price is going to turn around. So we've got head, left shoulder, right shoulder, upward sloping trend line here. So a rough retest of this, but I wouldn't really take that into account. And you can see here, so touch, touch, touch. If we keep going, I'm sure there'll be more, but yeah. So big move to the downside. That was the pullback, and we're just looking for the continuation. So on the first entry, it was actually taken on the 1 hour. It was a bit of a risky entry, and there was a few things that I didn't like on it, but I just didn't want to miss out on this position because I just targeted the recent lows, but I was expecting price to go way lower. So this was a 5% position for me, and this was one of the advanced breakout positions. So when you go on the 1 hour, what you can see here is, I'll draw this in, it'll make a bit more sense. So sort of a messy wedge here, and I just entered it short on basically the highs here. When you go down to the 5 minute, it would have been here. That was 20 pip stop, but we've probably had the spread in there as well. So I only just got stopped out of this one. It was a bit frustrating, but I was just expecting it to go to the lows. So advanced position. This one turned out to be just a minus 1% loss. As we had the pullback here, you can see pullback happened around about that 382 level. So I decided to re-enter on a wider stop again. So again, we're saying 20 pip stop, just entering at a higher position. Because we had those longer term confluences, my target again was just the recent lows, and then this one happened for just under 3%. So really, it's actually only a net 1.8% really, or 1.7% when we take into account sort of spreads and whatnot. So 1.7% isn't great on this, but when we look on sort of the 4 hour and the daily, it is still bearish to me. It's interesting that we've closed below the daily 50 EMA as well. I'm just going to hold fire. I probably won't look to enter back in this, just where it's an exotic pair as well. But maybe if we sort of see some sort of the acceleration here, I might look to enter this, because I really, you know, long-term target is here, you know, so really you'd want to be probably here actually, maybe in line with here, so around this sort of level you could really stretch it, but it's just a bit too risky for me. So maybe 735 is where I'd expect sort of price to head, maybe by sort of the end of the year. It looks still bearish to me, but it's not obvious. So when things aren't obvious, it's just a key just to get out, targeting recent lows. So that's why obviously I could have stretched it and just waited on the 5-minute 50 EMA and closed it then. But when you don't really have too much confluences and you know, the position's done, it's better just to close and move on to the next one.